Hello guys, today let us try to discuss about the last point in a trading, that is candlestick pattern. It sounds very different that we are discussing candlestick pattern on a last part, but candlestick pattern should be the last confirmation what we are considering while taking the trade. In my screen you can see some of the candlestick patterns which can be used while taking the trade. The above these 5 patterns are considered as a bullish patterns, and these are considered as the bearish patterns. And again, this is a bullish pattern and this is a bearish pattern. In this video we are going to discuss about how we can draw the strong levels by using just a single candlestick. We are not going to see the left part of a chart whatever present in the left. Just by seeing these candlesticks we can draw the exact levels in a market from where the market may reverse. So let's start with the first candlestick pattern, that is hammer or hanging man. There is a difference between hammer and hanging man. Both candlesticks look same on a first sight, but the same candle is considered as a hammer when it occurs at the support level, and if it occurs at the resistance level, then the same candle is considered as a hanging man. So hammer is considered as a bullish pattern while hanging man is considered as a bearish pattern. So whenever we see a hammer or hanging man pattern, the lower wick of the hammer or hanging man is a strong level. If we draw the level at the lower wick of the hammer, then surely it's a strong level and you can trust this level to trade in the future. No need to check in the past to draw this level. And if we spot a hammer, the next candlestick is expected to go up and the entry should be either at a 50% of this level or below the close of the body. It is considered as a more safer entry than this, and if you get an entry here, that's also okay. There is no issue. And the next candlestick is considered as bullish engulfing, and the bullish engulfing candle, guys, see this image clearly. This is bullish engulfing while this is not bullish engulfing. To consider the candle as a bullish engulfing, the previous red candle should be closed above the 50% of the green candle, and if it is not closed above the 50% of a green candle, then this is not a bullish engulfing. So if you spot a bullish engulfing in a uptrend, you will be expecting the price will go up. And if you want to draw the level from the bullish engulfing, the level is whichever the low, that low is considered as a level, and the close of a body of a red candle is considered as another level. And one more thing, to consider, the body should be closed above the red candle, and if this green candle is made a new high, then this is considered as a strong bullish engulfing, and the next candle is expected to go up, and you should take an entry from the 50% line. That is more favorable condition that will align the odds in your side to win a trade. And this is not a bullish engulfing, and if you spot this kind of a candles, then the logic to trade this is changed from the engulfing candles, and this is called as a pacing line. Pacing line means the green candle open with the gap and engulf the previous red candle more than 50%, say 60%, 70%, etc. And if you spot this candle, the level is the close of a green candle and the 50% of a red candle, and next candle is expected to go up in an uptrend, and you can take entry from here. If you find a rejection, it is favorable condition to trade the pacing line. And the next candle is called as a spinning top candles. Basically, these are indefinite candles. They behave in a different manner depending on where they appear in a market. If they appear in the middle of a market, say this is a support and this is a resistance. This resistance and support may be drawn considering any of these candles. Okay, and if these candles appear in middle of the trend, it is considered that the next candle will continue its direction from where the market is coming. For example, if the candle is green here, it will continue the green direction, and the market is coming from up. If the previous candle is red and you spot this spinning top, then the next candle will go down, provided that there should not be any level. Now, what happens if the level is present? Consider if you spot these candles and the level is present somewhere here, then this acts as a sign of reversal. So for that reason they are considered as a confusion candles, and depending where they appear, they will continue the market or they will reverse the market. And these are considered as a doji. These are doji candles, and these are equilibrium candles. They don't contain any body. And if you find this kind of doji, the upper and lower wick are considered as a strong level of support and resistance. And this is a dragonfly doji, and in a case of dragonfly doji, the lower wick is a strong support or resistance, and this is a gravestone doji, and the upper wick is a strong level of resistance. So how to trade these setups? If you spot these dojis in a market, what you are going to do is you need to wait till the market break this level. If it come back to the level and give you any candlestick signals, then you can trade in a direction of the trend. So trend following is very important while trading. So always try to remember that the trend is your friend, and you need to trade in a direction of trend with confirmation of the resistance from the level. And this is same as inverted hammer or shooting star. Like it's an inverted hammer, we also call this as a shooting star, and we use this kind of candlestick to trade in lower direction, and the entry points, the safer entry points would be here or here. And this is bearish engulfing, same as a bullish engulfing, but here we will be trading in lower direction provided that the trend is downtrend. Guys, you need to remember always that we need to follow the trend. It will favor maximum odds in our direction of winning a trade. And another thing, you need to consider that this is not bearish engulfing. And you know why? Because this candle is not closed below the 50% of this candle, and this is a dark cloud cover, gap up open and closed below the 50% of previous green candle. And provided that if you have a downtrend and if you spot this candle at the level, or if the level was here but a gap open and closed below the level, then you can expect the next candle will go down at least for next one candle. And if you found a rejection from this line, 50% line, you are good to go with upward direction. And the next candle is evening star and morning stars. So what is evening star and morning stars? If you find any such kind of a formation in a market, here you may find a spinning top also, that's not an issue. You can consider then also the market as a spinning top only. But one of the most important thing what you need to consider while considering this as the spinning top is, guys, this candle close should be below this low. Understood? If the candle is closed somewhere here, then the winning ratio is not as sure as this thing. So if you are going to put, you must and should consider that this candle should be closed below the wick of this thing, the previous green candle. And if you find such a situation, then you can enter a trade with this level or with this level. But this level is considered the most safer, but you will not get an entry here. So any entries above this opening price is appreciated if you are going to trade an evening star, provided that the previous trend is downtrend. Okay, clear? Understood? Then next is morning star. Morning star is same as the evening star. The difference is that it's a bullish signal, and again an important thing, the body is closed should be above the previous body's open, or if it has a wick, the body should close above the wick. Then you can enter a trade from this level or from this level. If you can't able to get this level, you can enter somewhere from here. And with this candle also you can draw support and resistance if you spot anyone. Like these lines act as a support and resistance for future market. So this is something about candlestick pattern, and then we will discuss further in the next videos.